afternoon, everybody. Welcome to the you-JIJALI webinar on investment. This afternoon, we are talking about how to make your money work for you. And it's an interesting topic that we'll be hearing from our partners this afternoon. As we start, I would like to introduce myself. I am Beth Anjiro, the program manager for you-JIJALI. And with us is part of the team. We have Grace and Alan, who are from the customer experience side. We also have Fidel and Wataka from the learning management side. The four will be assisting you as our participants this afternoon. In case you have any technical challenges, they'll be able to respond to that. So in case you find you cannot hear what we are saying, or you have a break somewhere, you can post it on the chat forum and they'll be able to respond, as well as when we continue and you have a question that you may want to ask, kindly post it on the chat forum and one of us will be able to respond to you. Also, at the end of the session, we'll have a question and answer period, which we will definitely respond to any questions that you have. So as we begin, I would want to introduce a little bit about who your hosts are this afternoon. That is, who is you-JIJALI? So you-JIJALI is a virtual learning platform that is powered by you-SUDI Limited, which basically means that we are a product of you-SUDI Limited, which is a social enterprise that deals with youth training in sales, work readiness, and entrepreneurship. And what we do as you-JIJALI is provide these various kind of trainings through a virtual platform, making us more or less available internationally or to anybody that would want to do this kind of training. And part of the training is delivered through virtual learning content. We also provide practical learning tasks as well as mentorship. And it is a 12-week program. So if you feel that you may want to undergo such a training, kindly go to you-JIJALI.com and you can sign up for the program. Currently, we are offering an offer of 1 month free when you register for the program. So you can check it up and sign up. And this will be interesting to have you on board and go through the 12 weeks of training with you, as well as the 12 weeks of mentorship with you. So as you-JIJALI, we work with various partners. These are organizations and institutions that we come together with to provide various training tools. Among those training tools is webinars, in which every month we hold a specific webinar on a topic that we have been able to receive feedback either from our trainees or through social research about various topics that are needed. So this month we are doing Investment 101, how to make your money work for you. And to do so, we are working with SORTIKA, one of our partners. They are a personal wealth management firm, and we will be hearing more about what this is about, being a personal wealth management firm. And so I will introduce somebody from SORTIKA who will take us through the session, and will also tell us who he is and who SORTIKA is and what they're delivering to us this afternoon. I welcome you, Ian Muriuki, who is our speaker this afternoon and who works with SORTIKA. Karibu sana, Ian, over to you.
Thank you very much, Betha. That was a lovely introduction, and we are very honored actually to be here and to talk to your audience on this topic, which is very, very, very also personal to us, given that at SORTIKA, we are a personal wealth management fintech platform, and we basically make it easy for people to take part in 3 major areas of wealth management, which is saving. Then there's the investment side, and there's also the taking part in affordable lending services. Although SORTIKA is not a loan application, we facilitate people to lend to each other peer-to-peer, and also to agree on the interest rates and to come up with a flexible, arrangement in that regard. So we basically cover a full spectrum when it comes to personal wealth management, and we see this as being something that could be of strong value to people in your within you-JIJALI and the entrepreneurship program, as well as the technical skills program. as well. So thank you very much. It is a pleasure to be here. So Betha, I want to jump right into the presentation. I think we can proceed, right?
Yes, Ian, you can proceed right to the presentation.
All right, great.
Yeah.
All right,
Thank
so
you.
I'm just going to pull up. I'm going to screen share. So give me a second.
As Ian is sharing his screen, kindly remember that if you would want to ask a question, we have the chat platform. You can post it there and we will respond. Even along the presentation, we will take a short break to respond to some of the questions that you'll have asked as the presentation is going on. Also, if you would like to say something, don't unmute yourself. Instead, raise your hand or post it and somebody will cue you in. Over to you, Ian. Thank you.
Okay, fantastic. So welcome everybody. Again, as I mentioned, it is truly an honor to speak to you all. So we basically hoping this will be a good, insightful presentation to you in regards to how to make your money work for you. So this is actually by our team here at SORTIKA. And one of our major slogans with the application is Niki Spend, Ni Save. I think you can see that on the logo. So that speaks to some of the innovation that we built, which allows you to save when you're like through your spending patterns and when you're doing your digital transactions passively. So I'll cover this later. For now, let us jump into the topic for the day. So what is investing? I'm sure a lot of people have ideas on what investing is and what it takes to be an investor. I'm sure some people have also some grandiose ideas or think that being an investor is having 30 million to put into a project or something. But being an investor is actually it's in essence the act of allocating resources, usually money, but it can also be time and it can also be your effort, with the expectation of generating an income or profit, to put it simply. So you can invest in endeavors such as using money to start a business, or in assets, such as buying a house or real estate. Or you can also apply it into capital markets products. And in essence, this is the difference between that, you going into, actually build a house, that's active investing so that you can sell it. And then passive investing is more when you invest in a product, like a capital markets product, such as equities or bonds or any of these, which I'll talk into more going forward, so that it earns you money. So in that way, your money is almost passively working for you and earning you a return. So you do this with the hopes of reselling the same asset or capital market product at a higher price later. And so with investing, there's actually, I would like to, show that I would like to demonstrate that there's a difference between, I'm sure we know this, theoretically, but the difference between investing and saving is what I would like to actually elaborate on. Sorry, let me just go back. Sorry about that. Yeah, so when it comes to investing versus saving, saving is when you basically put money aside so that you can reach a specific goal that you're looking at. And I'm going to cover this later as well, but there are a few factors which make investing more of an appealing option than saving. And one of them I'll mention now is that, in regards to interest rates, I mean, inflation rates. We know that, inflation happens at a certain percent at any given time. And when you're basically putting money aside to sit in a bank, it's actually getting watered down over time, given the inflation rate versus the interest rate that the bank is giving you. Now, currently, banks maybe might offer about 6-7% on your money that you put in to sit with them as an interest rate. And if the inflation rate currently in Kenya is at around 6%. You can imagine what that's doing to the money that you have sitting around that you would expect would be there for you at a later point for a rainy day or something of the sort. So just let me jump onto the next slide. So key takeaways when it comes to investing is that number one, risk and return are very much correlated. They're basically two sides of the same coin. In essence, when you're looking at an investment, you have to be able to analyze the kind of risk to reward ratio that you're really targeting. Some of us, maybe especially the younger generation, might be keen to invest into much higher risk products or business opportunities, because we have maybe tend to have less responsibilities and less obligations on us, as opposed to someone who is much older, middle-aged plus, who might have families and all these things going on, and companies they have to run, so they tend to be more conservative with the investment. But it's one thing you need to remember is that risk and return are very much coincided, and you have to consider this as you go into your investing. Then the other thing is risk and return expectations can vary widely within the same asset class. So this is specifically, I think this goes across the board, because you can, for example, we'll give an example of equities or stocks here from the Nairobi Stock Exchange. So in the stocks category, there's companies that are considered blue chip stocks, and these are the companies with the highest market capitalization. And then there's micro cap stocks, which are companies in essence that have lower market capitalization but are still listed publicly and can be traded on the stock exchange. So you tend to find that the risk profile of these asset classes is very different, because it's a much more steady and secure investment when you're investing in a blue chip company. Obviously, because of the high liquidity they have, liquidity being their capital base, and also in terms of the fact that them being the most popular traded companies, there's a lot more information on them, there's a lot better reporting mechanisms from them, there's a lot less volatility in their pricing compared to market cap equities, which they tend to have less liquidity around them, much less in the attention of the public eye. The reporting mechanisms may also be not as thorough as the big companies, and also the price tends to fluctuate very wildly at any given time. So that makes it a much riskier investment. So your expectations on return and the analysis of your risk when you're getting into these things can vary very widely across asset classes. The next thing is that the type of returns generated will depend on the asset. For example, equities or stocks tend to pay dividends on a quarterly basis. So every 3 months they'll do an earnings report, and then they'll do the decisions on whether they're going to pay dividends for that quarter, or whether they tend to pay in that cycle, as opposed to bonds, which pay interest. But bonds tend to pay interest on a sort of yearly basis over time.
Sorry, and before you move on, there's some people who are having a difficulty hearing you. Could you?
Sorry, yeah. Is it much? I hope it's better now.
Yes.
Better now? Okay. Okay, can you hear me better now, yeah?
Yes, we can.
Okay, great. So the other thing we have to mention when it comes to takeaways from investing is that investors can decide to take a do-it-yourself approach. And this is important. You can decide to do it yourself, or you can employ the services of a professional asset manager. So in essence, one implies that you will actually have to go and do the research on the specific asset that you're trying to invest in. Especially when it comes to capital markets, there usually tends to be a bit of analysis you have to do on the previous performance of the asset, what it's there's a bunch of technical analysis that you would have to do. And then there's the other option of an asset manager who would actually be able to, in essence, what they do is that you give them a return, and you give them a return. I mean, you give them an amount of capital, they will invest it, and then they'll give you a return and save you the hassle of having to think about all these things and do the technical analysis yourself. So that's one aspect we have to mention. And then as we proceed, I'm getting an update that we have Gideon as well. Has just he's trying to join. Maybe Grace, if you're Gideon is our founder here at SORTIKA, and also a mentor at you-JIJALI with the entrepreneurship program. So I think he's trying to join in, but I will proceed with the presentation. Yes, so then finally, in regards to takeaways on investing, buying a security qualifies as investing or speculation, depending on three factors. So it can either be, deliberate decision to invest, or it can be just you speculating almost as if you're gambling, depending on three factors. The amount of risk taken, that means the amount of capital you have to invest. How much of that are you going to risk, and how risky is the asset that you're investing in the first place? The next thing is the holding period, which is the amount of time that you're looking to, allow the investment to mature or to bring returns. And then the third thing is the source of returns, or in essence, the asset itself and its tendency or its return over time, how it tends to perform over time. So these are the takeaways I think people need to have in mind as they look into investing. Let's carry on. So I mentioned briefly on this, but we'll touch on it again. The difference between saving and investing. So a lot of people tend to think these maybe they can be used interchangeably, but they're definitely different and different aspects of the financial process. So on saving is actually putting money aside in a safe place so that you can reach certain goals that you set for yourself, or you can basically achieve certain objectives, but not with the intention to get a return back. So it can be something as maybe you want to save towards going for a dental appointment, or you want to save towards buying a car, or save towards buying a house or something. So this is money that you put aside. It generally will not be earning you any return, but you're putting aside so that you can take part in, you can acquire something or buy something or take some service. So one of the things that you have to consider when you're looking at saving is that there are certain factors that will affect your savings significantly, and I mentioned this briefly before. So one is the interest rates. Interest rates are the rates that the banks will give you for money that you allow to sit with them, maybe in the form of a fixed deposit account or something of the sort. They tend to give a percent, ranging around 6%, 7%, maybe 8% if your bank is exceptional. And these are one of the things you need to consider, so that at least when your money is sitting there, it's not just idling away. It's also securing some return. However, the next aspect that will affect your savings is the inflation rate, which is one thing people maybe tend to miss out on as they consider saving or putting their money in a bank. I mean, we all love putting our money in the bank, but we have to consider the inflation rate at that particular moment in time. I think currently it's at 6% in Kenya, and the interest rates the banks give, maybe I think M-Shwari does 6%, and other banks do about 6%, 7%. So you can already see how money can get watered down in that particular position. Then the next thing you need to consider is income levels. So your own personal income level, and how much of that goes towards costs that cannot be avoided, such as rent and clothing and food and the essentials. How much of your income goes to all those things, and what does that leave you with to actually put aside to save? So I think that's one of the major factors that people do tend to consider, or that tends to put people off when it comes to saving. And then the next thing is economic growth at any given time will impact your savings rate, because it tends to have a stream down effect on the amount of economic activity that's going on. If economic activity is in a boom period, you will have more leeway to save, because likely maybe your company is doing well, or your company is paying you well. So you can be able to put aside money. But you can see, in times, and these are the times when it's essential to actually put money aside, because I think what we saw from 2020 with Corona, with the COVID pandemic, is that I think a lot of people were caught unprepared, because we were having generally okay times economically before then. I mean, it wasn't the best, but people weren't really, the culture of financial literacy and the culture of saving it was still not yet a very major thing. Then when the pandemic hit, it became a surprise and a shock to a lot of people, because they hadn't really buffered themselves prior to that, for a situation like this. So in Kenya currently, according to Vision 2030, we're supposed to be at 25% save as the savings rate in comparison to GDP, and currently we're at 4% of that. So you can see that in the next decade, platforms such as SORTIKA that help people to participate in savings very easily will be very important going forward. Then finally, the income distribution is another factor that influences saving, because the tendency is that when you're in a much better economic position, you are much more empowered to save, as compared to, let's say, when you're in a very stringent economic position that has most of your cash directed in different directions as soon as it arrives, is one of the things that you need to consider, or that affect savings rates. And then finally is generally just a confidence thing as well. Tendencies that when people are much better, in the economic position, financial position, they might be able to consider now putting money aside so that they save. And then we'll go into investing. So investing is putting your money into something specific with the expectation that its value will grow over time. And this will provide you the opportunity to create more wealth. And then, as I had mentioned before, there's two models of investing. There's active investing, which is you taking X amount of capital and going and buying a couple of goods or products, or maybe a home, or building a home, actively going and securing a product or a commodity or an asset that you will then go and resell for higher value and make a profit on that. That's one form of investing. And then the other form of investing is passive investing. And what this is in essence allowing your money, basically just putting your money in a capital markets product, or in a service that is able to add value onto your money without you having to actively go and build the house, or go and purchase the commodities, or do any of these manual tasks. But in essence, you have the money working for you and passively generating an income. And I'll show you how this is done. So I'm going to run through the 7 principles of investments that we identified across the board with every investor. These are things that they always have to consider and keep in mind as you proceed with your investing and wealth building activities. So number one is the allocation of your assets appropriately. So what this is in essence is that investors tend to divide their money among different asset classes, such as stocks, such as bonds, such as cash alternatives, or such as money market accounts. And these asset classes have different risk profiles and potential returns.
Oh, okay. Ian, you're back. Ian?
Yes, can you hear me? Yes, okay.
Ian, we had lost you for a minute.
Oh, sorry about that. So I'll just go over that again. Okay, so on the 7 principles of investment that we identified, the first one that we would like to talk about is the allocation of your assets appropriately. So most good investors will not put their money into just one or two or just one specific investment or asset class. And the reason for this is a principle basically known as risk diversification. So in essence, investors will divide their money amongst different asset classes, such as stocks, bonds, and cash alternatives, money market accounts. And these asset classes all have different risk profiles and potential returns. So the idea behind asset allocation is that it is to offset any losses in one specific class through gains in another, because of their their different risk profiles and the different markets that they invest in. You tend to find that when one investment goes down, another one goes up if you have allocated your assets correctly, and if you haven't put them all into assets that are very correlated, that are the movement of one asset affects the movement in another asset in the same direction. Whether it's one asset goes down, the other asset goes down. This is what we call risk diversification, and it is basically part of the process of reducing the overall risk in your investment portfolio. Investment portfolio is basically the basket of things that you've actually put your money into, so that it can earn it can mature and get you a return. So the most appropriate asset allocation usually depends on an individual situation, and among other considerations, it might be determined by 2 other factors. One, which is time, because investors with longer time frames might be comfortable with investments that offer high potential returns, but also carry higher risk. So that means they have a much bigger, they're not really restricted on in terms of how long they can hold their investment, and also tend to have quite a like a bit of liquidity or volume when it comes to the capital they're investing. And so that allows them to take slightly higher risks from in considering the investment product. So a longer time frame may allow individuals to ride out the markets ups and downs, and an investor with a shorter time frame may need to consider market volatility, which is basically the movement of price. Let's say for example, in the forex market, you tend to have forex currency pairs that people can trade on. So for example, the British pound compared to the euro. So the volatility in, let's say, that particular pair could be quite high, considering that it represents 2 of the major world economies, and there's a lot of activity taking place from various levels when it comes to central banks, hedge funds, investment companies, and then finally with retail traders as well. So this volatility of sudden changes in price is something that someone with a shorter time frame may need to consider when they're trying to invest in something or an asset class. Then finally, the second factor is the risk tolerance. Risk tolerance is basically, in essence, an investor with a higher risk tolerance may be more willing to accept greater market volatility, so greater changes in prices, in pricing for that particular asset in the market, in pursuit of potential returns. And an investor with a low risk tolerance may be willing to forego some of the potential high returns in favor of investments that are steady, slow, and guaranteed returns, rather than very ambitious returns that could be subject to risks. So every investor has a different type of risk profile depending on the kind of returns that they're looking at and the amount of capital that they're willing to stake in an investment. Yes, so I'll go on to the next one. This is principle number 2, is to take advantage of opportunities. So I'll briefly, this one is very straightforward. In essence, you just need to be able to pay attention and to take advantage of new investment opportunities that are available to you, and make sure that you do the research and the due diligence on them to figure out how best you're going to capitalize on that particular opportunity. Because and then this is part of what we do at Sortika, is that we're able to expose our clients to investment opportunities that they may not have been able to access or even get information on. And we also help lower the barriers on entry to those and give them a bit of financial literacy training and education, so that they can be able to make better decisions on new opportunities that arise. So the third principle, very important, is you have to take the appropriate risk. And what this means is that, we know the saying that, no risk, no reward. And we do know that the bigger the risk, tendency is that the bigger the reward. However, this is only the case when you're able to manage your risk well. So this is one very important aspect of investing in anything, anything at all, is being able to manage your risk and do a sort of analysis of, if I take this amount of risk, what is the potential reward or return that I'm going to secure out of this, and how best can I mitigate taking exposure to huge losses or unnecessary drawdowns in my investment through being able to just manage your risk. So part of risk management is out of all the capital that you have, are you going to put 100% of it all into the same investment, or are you going to stake maybe 20%, see how that does, and then stake another 10%, put it somewhere else, and then stake another 10%. So in that way, you're diversifying your risk, you're spreading it out, you're spreading your risk thin across different asset classes that will perform differently based on the market. And then 2 is being able to calculate your risk reward ratio, or just have an analysis, or at least a goal in mind that, yes, I'm taking this risk so that I can get X amount of reward. And 3 is also just to be very practical when it comes to investing. Don't invest 100% of everything you have into something, but tend to use proper allocation of your assets. So let's go on. Let's proceed to number 4. Number 4 is very simple. It's make regular contributions. So when you do start your journey on investment, don't look at it as a single like action that you just do once and just leave the investment world after that. Ideally, if you want to sustain, or if you want to generate more long-term sustainable wealth, you will invest, and then you'll make regular contributions or top-ups to that same investment or to other investments, and over time you tend to find that you're generating a very strong base of sustainable wealth as you proceed and you get into that culture, because investment is about 1, consistency, number 2, discipline. So the more consistent you are with your investing trend, the more and the more discipline you apply when you do these investments. And even in terms of discipline, also counts, also touches on, once you invest, will you be will you tend to sort of move with the flock when it comes to investing, especially when it comes to capital markets? There tends to be this this herd mentality when it comes to investing in capital markets. That one person will say, "Hey, let's go and invest in Safaricom," and they hear maybe 3 and 4 of their friends saying, "Let's go and invest in Safaricom," so they jump and invest in Safaricom, and Safaricom maybe takes like a small dip in price, and then the same group of friends are like, Safaricom is making losses, it's making losses, so now everyone decides to wipe out the or liquidate the investment. And then maybe a few hours after that, Safaricom has maybe done an announcement that they are launching 5G, and there goes the share price increase, and you've completely lost out on those returns because you are not disciplined enough to also be able to hold your position and do a bit more research into things, as opposed to jumping into the herd mentality of investing. And then number 5 is also very important, is that when it comes to investing, it's good to understand what you own. So if, for example, I say, go and invest in bonds, it's good to understand what bonds are. What is an actual bond? How does it generate money? Who issues a bond? Where is it listed? And how does the market participate? How has it performed previously? It is very important to understand what you're investing in, so that you're very well aware of what's the risk and what is the potential reward. Most of us will tend to invest in something we don't understand fully, because we've seen the reward is so attractive and we've seen 100 other people are doing it, so we base our decisions on that. And it will work, every now and then, but it may not work all the time, and can lead you to those are speculative investing behaviors, which it's gambling. In essence, it's like going into a casino and gambling. So you tend to want to understand what you're investing in. It's like buying a car. You'd want to understand a few things, at least, about the make, the model, how it performs, before you go in and go and purchase it. You'd probably want to take it for a test drive. That means maybe in investing, that would be doing maybe like a small pilot test, or like a small investment, just to see, okay, that this is how it did, this is how it works. So this is good to consider when you're planning to invest. So number 6 is that you need to consider starting early, and this is absolutely important. I mean, we see this with very famous asset managers, leaders of asset management companies and fund management companies, such as this company called Berkshire Hathaway. It's run by a guy called Warren Buffett, and I think it's one of the best performing asset management companies. This guy Warren Buffett started his investment trend while he was, I think, 13, 14, buying stocks after delivering newspapers. He'd deliver newspapers, take his earnings, and go and explore investments in the stock exchange there in the United States. The tendency when someone begins earlier is that the compounding of return over those times, and as you keep on putting in money, and you keep on adding the amounts of money that you're investing in, and enhancing your knowledge on the investments, is that over time you actually end up building very long-term sustainable wealth. So starting earlier is something we very much endorse, especially here on Sortika, because we've seen that it's a very crucial part of financial independence, when people are able to understand what is investing and take part in it from as early as possible, in essence. And yeah, so this is one of the key principles I think people need to also hold on to. And then finally is to manage your emotions. So investing tends to, as much as there's a lot of technical analysis, and there might be some research and mathematics that goes into it, there's also a very strong element of your mind state, or your, let's say, your emotional intelligence, because when you're dealing with things to do with money, it's a very sensitive topic, a very emotive topic. So people, are very, very strongly identified with whatever they're doing when it comes to investing and with money. So you see, if you are in a position where you make investment decisions from either a sense of excitement or exuberance or a state of panic, based on the herd mentality I was talking you about, the tendency is that you will likely end up setting yourself up for a big loss or a big failure. And the reason behind that is that when it comes to investing, you have to make sure that you're really coming from the most clear-headed place, and you're not allowing the sentiments that go around you to sort of cloud your judgment on the decisions that you're making. They can advise the decisions you're making, but they definitely should not determine what decisions you're going to make. So it's good to have a sense of emotional intelligence, or a sense of clear-headedness as you're looking to get into investments, so that you don't end up clearing out your whole account balance from a highly emotional decision to invest. Okay, so what can you actually invest in passively? So passive investing, as I mentioned before, is being able to allow your money to put your money somewhere where it's going to work for you and it's going to earn you money passively without you having to go and build a house, or buy and sell a car, or something of the sort. So I'll mention them briefly here. So the one of the assets that you can invest in is high yield savings accounts. So these are things like fixed deposit accounts at banks. You can put your money there. It's being saved in a financial institution and it's earning you a certain amount of return. I think it's about 6, 7 around percent currently in the Kenyan context. And the other one is the exchange traded funds, or ETFs. So ETFs are basically a fund that is built around the activity of specific companies. You can have an ETF, I mean, of specific assets, sorry, of specific assets, or of one asset. Now, for example, in Kenya, we have an ETF that was launched on the Nairobi Stock Exchange. It's a gold ETF. So in essence, it's literally a tracking of the gold trading industry as a whole, all that value and activity compounded into one fund that people can actually invest in as a whole, compared to actually going to buy the gold physically and then going to try and sell it. So this, what it does, these exchange traded funds track the activity, the profitability, the capital flowing through that particular industry, and they consolidate that into a fund that people can now invest in and gain returns in. Government bonds, these are another investment class, and these tend to be a favorite of especially high level investors who want a steady return over time. So you have the government, or any, but for example, Kenya, when they want to finance a whole set of infrastructure projects or something, they can launch a bond. So this is in essence like it's a form of debt that the government says, I will pay you, you guys give you, I will raise this amount of capital from the bond market, and then I will pay it back plus interest over a time of maybe 5 years. It can be a 10-year bond. They tend to be very fixed and steady returns, because one of the best parties to be able to give debt to is a country. They hardly ever default on debts, and it's usually a secure investment product for these high level investors. Corporate bonds are, in essence, when a large company, for example, this company called Acorn, they I think are the guys behind the Kwetu residential homes and a bunch of other investments in the country. It's a very large company, so a company like that can set up a corporate bond that people can now, they use it as a form of raising money from the public. It can be international or it can be local public, and they basically pay back that bond with such an interest on it. Then the other products is NSE. NSE is the Nairobi Stock Exchange, and the NSE has indexes, index funds, and these index funds are in essence a compilation of companies which are listed on the NSE, put together into a basket, and then that is now what we call an index, in an index of these companies. So you, as an investor, instead of investing instead of investing in just one company and exposing yourself to the risks inherent to that company, you can invest in an index of company. It's an indice in plural, indices, which have a collective of companies and tends to diversify the risk. We spoke about the diversification of risk earlier. So it's a very useful investment option. The other one is Nairobi Stock Exchange equities. These are companies that are traded publicly in Kenya, and they're listed for their shares are accessible to the public for purchase and for trading, buying and selling to get a return. So and the other product is offshore. There are a couple of offshore markets that you can actually participate in currently, and through SORTIKA, we will be providing access to these offshore market products. These are things like investing in offshore stocks, being able to actually buy Tesla stock and own Tesla stock, or you can also trade on the futures contract of that Tesla stock. That means you don't own the stock, but you trade on the value of the price of the contract, that particular contract for that stock. And this also tends to, provide, these offshore markets tends to provide very lucrative returns, but also tends to be very risky, especially with when someone doesn't have good risk management practices. Then finally, there's municipal bond funds, although I don't know how well that has picked up here in Kenya. So in essence, for example, if we needed to build this, I see, there's a lot of construction going on here along Wayaki Way towards Mombasa Road stretch. So, one way the government could have raised money for that, but could be through municipal bonds, as opposed to going and taking a loan from China or something. This is basically a bond that is limited to participation by local, like the local market, so that and the purpose behind it is to go towards going to build infrastructure projects, government projects, and other projects that are necessary for the national development agenda. So a lot of other better developed economies tend to raise their financing for infrastructure projects through these municipal bonds, as opposed to the loans from other countries. So the final asset class I forgot to mention over there was the cryptocurrencies. I don't know if I'm pretty sure everyone has heard at least one thing or another about a cryptocurrency, whether it's Bitcoin or or Ethereum or one of the other hundreds of cryptocurrencies that are out there. But they tend to as we proceed, they tend to be becoming more and more popular in the public consciousness, and they're becoming more institutionally recognized as a potential investment products. You have huge asset management companies pumping in hundreds of billions to trade these assets and secure a return from them. However, they still hold a very unregulated space in the markets, and so the tendency is for people either to invest blindly or to totally fear them altogether. But the key is just to do your research, get a bit of an understanding, and hopefully through platforms like SORTIKA you can enhance your participation in these markets. Okay, so I'm just going to take a short break. I'm sorry, actually, before we do that, let me cover this slide, and then I'll open it up to any questions that people might have. in regards to what I went through. Yes.
All right, Ian, thank you for the presentation. We have two questions that have come to the floor. The
Okay.
first one came from Jacob, and he was asking, is this the right time to invest, putting into consideration the state of the economy as well as the pandemic we are facing? So he's asking, is it the right time to invest? What would be your response to that?
My response to that is, you see, currently, where we are with all this pandemic and economic crisis is going on, it it really depends on your financial position whether it would be the right time to invest. Actually, any time is the right time to invest as long as your financial position allows it at that particular time. Currently, we're facing this economic downturn, so in terms of liquidity that people might have or money aside, just that they have to put into investments, it might be low. However, what I will say is that I had mentioned earlier in terms of the difference between saving and investing. You can actually invest as a form of saving, and this is how you can do that. There are certain investment products that are out available in the market, some of which we actually distribute through Sortika, and you can actually invest in them through Sortika, which give you steady fixed returns over a certain amount of time. So you see now, with the little money that might be available, as opposed to putting it into a savings account or into a bank account somewhere, fixed deposit, maybe it's earning you 6%. But again, we mentioned this: the inflation rate is 6%. So that's your money is being watered down as it sits, being saved. Although you're thinking that that money is there, it's going to be there and available for a rainy day, but the buying power of that money is going down as we proceed. Number two is also the currency that you save in also has an influence on that watering down. Because, for example, if let's say you have your savings in Kenya shillings, which most of us will, the over time the value of the Kenya shilling, is sort of it goes as it depletes, and this waters down your savings, as opposed to if you had your savings in, let's say, dollars, or in another asset that tends to maintain or grow its value over time. And so this, I think, is something that it needs to be definitely considered when someone is thinking about it. Ideally, when you're in a crisis situation, any penny you get, you want to put it aside and save it. But if that same penny you can put it aside, save it, and it's earning you some income, then you put yourself at a stronger position, in a car in a position in an environment like this current one. I hope maybe that clarifies.
Thank you, Ian. Jacob, if you feel you still have an answer, a question attached to that, you can still post it. Or when we have a question and answer moment, you can raise it to get more clarification if need be. Another question that came on was from Samuel, and Samuel was asking, which maybe you have touched a bit, but you can expound on, what factors you consider before you start investing? What factors will you consider when you start investing? And attached to that question was also the aspect of that to know fertile investment opportunities, especially during the COVID-19 period.
Okay, so on the first one, or the first part of the question, number one thing you have to consider is your financial position and the amount of capital you actually have to allocate into investments. That is, I think, one of the key things that you have to consider. Then number two, you also have to consider what's your risk appetite. When you're investing, there's some investments that will give you high returns, but they're very risky. You understand? So you have to be able to understand what is your risk profile. It can either be high returns and it's very risky, or it can be very low return, but it's a steady guaranteed inflow of return, guaranteed over time. So this is one of the things that you need to consider when you're about to invest. What's your appetite for risk, or what's your tolerance? In fact, what's your tolerance for risk? Because other people might have a stronger financial position and be able to tolerate much higher levels of risk. Someone needs to switch off their microphone, I think. Maybe better you could go ahead and mute.
Kindly mute the host. Please also mute if he's not speaking. Thank you. Back to you, Ian.
Okay, yes. So I would say two things you need to consider. Number one is your financial position. How much money do you actually have to put into any investment? And number two, you have to consider your risk profile and your tolerance for risk. How much do you want to risk of your money, and what is the expected return that you're looking at? Number three, you also need to consider: do you want to do an active investment? Do you want to go and purchase commodities and sell them, for example, or do you want to go and maybe purchase a house and then resell it at a higher price? Or do you want to have your money passively working for you in a passive investment? So that now leads us on to the capital markets. Now, capital markets are, in essence, they're financial markets. These are markets where money is traded like the way tomatoes are traded at the markets, for example. The money is exchanging hands constantly, whether it's in the forex, the commodities market, the stocks market, the bonds market. There's a lot of currency flowing. For example, in the forex markets, every day for 5 days a week, and this is still the case. Actually, this was still the case during the corona pandemic, regardless of whether people were taking losses or taking profits. About $5.3 trillion every single day is exchanging hands in the forex market alone. So it just gives you an idea of the kind of opportunity, but also the kind of market that you might decide you want to put your money in when you're investing. So when it comes to the capital markets, there are various asset classes that you have availability to, and it is basically just now upon you to basically do your research and see which particular asset class appeals to you more. Maybe looks more lucrative, or maybe looks more secure, or maybe is more in line with your strategy as an investor, because every investor has a different strategy and a different risk tolerance. So I would say those are about three main things that it would be good to consider before you invest in an asset class or in anything at that matter. Then number two, the second half of the question is yes, we actually, what we do on Sortika, we have very special relationships with a lot of the companies that are regulated locally to provide investment products. So we actually scout and we curate investment products that would be the safest bet, or maybe provide the best return, or maybe are able to help you meet your wealth building goals based on what those may be. So I'll give an example. For example, one of the products that we are able to that we're currently distributing on the platform is a product called Mansa X. It's by a company called Standard Investment Bank, and currently it's the best performing investment product on the market because it's able to give above market returns of 24%, or at least that's what they were able to pay a gross. That was the gross earnings for 2020 for their investors. And I think after they deducted the management fees and all, they paid about 18 point something percent. So you can see that's a very high performing investment product. But it also tends to have a threshold, minimum investment thresholds that you can invest in, that can allow you to invest in it. So for example, if you walked straight to Standard Investment Bank today, looking to start an investment, they would ask you to give them 250,000 Kenya shillings just to activate the bare minimum amount to activate the investment. But with Sortika, what we are able to do for the retail market, who we know that they're not able to just maybe up just out of the blue show up with 250,000 plus for an investment, we lower the barriers to entry significantly through our innovations on the platform, and we are also able to now enhance people's understanding much further on these investment products, how they work. And we also allow people to be able to, we have a robo advisor, which I'm going to talk to I'm going to speak on the next phase of the discussion. So in essence, we make the process of investing very easy and seamless for people. We have various investment products available, whether it's NSE, Nairobi Stock Exchange products, or whether it's products by companies like Britam or Standard Investment Bank or ICA Lion, and the likes of these companies that are licensed and regulated in Kenya. And in addition, we also in the process of licensing or securing a license to be able to provide offshore investment products that should be able to be safe for the Kenyan retail market to take part in. So I hope this maybe clears up the question.
Mahmoud Hussein was raising a question about the forex market, but I was requesting that he would clarify the question a little bit, because it seems like it stems from what you were responding to previously about various arenas where somebody could invest on. So if that's not the case that he was asking about, maybe Mahmoud, you could post the question and make it more specific. But as Mahmoud does that, we also have someone who was asking whether they can qualify to invest in Sortika. Maybe you can respond to that after you talk about Sortika. And so somebody else, Patricia, was asking about investment in mutual funds, as well as Rose was asking how much does one need to start investing. You could talk about the mutual fund and how much one would need to start investing.
Yes. So in essence, in Kenya, in the Kenyan context, there's a couple of asset management companies such as Britam, such as UAP, such as Apollo Asset Managers. There's actually quite a long list, and when they get licensed to collect money from the public, so that they can trade it and provide a return, they're usually limited on very specific asset classes that they can invest in. So you maybe, for example, with the money market funds, Britam has a money market fund. Genghis Capital has a money market fund. Which other company? There's Orient Assets Managers has a money market fund. This particular fund is specifically it's tied to investing in two asset classes specifically, just bonds. It can either be just bonds or it can just be local stock exchange. So with a mutual fund, with a mutual fund, it allows you the option, some flexibility in terms of the asset class that you can actually, in terms of what the company can invest in on your behalf. So it basically tends to have more of a diverse pool of assets that it can invest in. So when you put your money in there, it's the tendency that it might earn you better returns, and it might have more stability on the account, but it has a higher amount minimum threshold amount as compared to the money market fund. So in a money market fund, a lot of the companies that are providing a money market fund, they do so with a minimum investment amount of 1,000 shillings. Maybe some might even do 500, some 1,000, some 2,000. It's a very flexible and accessible product for the retail market. Mutual funds tend to require a slightly larger amount of capital because it's a more of a long-term investment. The money market funds are a short-term investment. You can liquidate your investment in about 2 days. And it tends to earn, I guess it's about 9%. But with a mutual fund, it has a slightly higher return, and therefore it's slightly more lucrative. It's a long-term investment, but requires you to also put in a bit more capital into the mutual fund. And these are all products that ideally you can be able to access through SORTIKA. Yeah, for the person who was asking whether they can invest, you can invest through SORTIKA. And yes, eventually, when we list as a public company, God willing, then yes, you can purchase shares in SORTIKA as well.
All right. Thank you, Ian. We have, I think we can allow you to go through how SORTIKA can help. That might raise other questions as we go along, or clarify some of the issues. And then we can also respond to a few other questions that have come on board after you go through that. Back to you.
Great. Okay, so let's get back to the presentation. So how is SORTIKA relevant to any of this that we've discussed on the presentation to you today? So one of the key areas that SORTIKA has been able to innovate is on this thing called passive saving. So passive saving is an innovation that, in essence, and it ties into our phase in the company, which is Nikki spend, na save. So in essence, every time when you're doing transactions digitally, whether it's M-Pesa, card transaction, or any of the like on your mobile phone, the APIs on the app are able to pick on that, and then it prompts you to basically put aside a portion of the value of that transaction aside towards your savings goal or your investment goals. And so that's why we say passive savings towards activating your investment goals. So with passive savings, we found this to be quite popular with our clients. It's actually our leading service on the application. Whenever I go and I buy, let's say if I go and buy, let me go and say I fueled my car. I spent X amount, let's say 100%, 1,000, right? So on the application, you can set the rate, the percentage of the value of a transaction that you want to be passively saved. So it can be anywhere between 1 to 10%. I wish I had the maybe I can send over a video tutorial to Betha and Grace. They can share it as well to show you how these innovations actually work. So whenever you're spending, you spend 1,000 and you've put, let's say, you've put around 5% of that transaction to be saved passively, right? So you will save when you're spending, you'll get an STK push prompt. This is a prompt from Safaricom. They're the ones who help us in terms of, we have a partnership with them in regards to actual enabling this passive saving. So it gives you about, when you're doing your transaction, about, let's say 0.05%. Yeah, so when you're doing your transaction for 1,000, it'll prompt you to put aside 50 shillings. And this 50 shillings is going to be allocated equally amongst all your goals on the SORTIKA application, because SORTIKA is a goal-based application. We help you achieve your goals, especially your financial goals. So when it comes to savings, there are saving goals that you can create, whether they're custom savings goals, utility savings goals, premium savings goals. I will speak about that going forward. And then specific to now investing, you see, as I mentioned, each investment product has a minimum investment threshold, right? So through the passive saving function, you find that you're able to constantly work towards getting to that minimum investment amount and activating that investment goal, and then therefore start earning the returns of that investment goal. And the passive saving function makes it very seamless and convenient for you, because you don't really have to go out of your way to go and say, I want to deposit this amount of cash into now this particular investment goal. But it's something which is happening almost passively. Once you authorize the prompt to put aside a portion of the value of your spending, it'll automatically take that money and put it into Sortika and spread it across your goals. And so that way it's able to make you get to your investment goals very quick in that regard. And you can also actively go and deposit money into the Sortika goal that you want to deposit, or to allocate it equally to all your goals. And that is now the difference now that we have those options. There's the active saving and there is the passive saving. And that now touches again on the phrase Nikki, spend na save. Okay. So, and then the number two aspect that Sortika value proposition Sortika may have for anyone looking to invest is that we have a robo advisor on the application. And when you download the application, you basically see it as as an auto create goal option. So what the robo advisor is that we did a bit of research with our clients, and we did a survey, extensive survey, to find out what are people really looking for in their investing, and what are their main objectives and concerns when they're investing. And we found that a very big portion of the people, I think about 70% of the people we surveyed, they tend not to want to look into the details of how these investment products work, how the capital markets work, how the NSE products are performing. To go into all the nitty-gritty of doing this research is a bit tedious for them. Then they just want to know that it's a secure investment. Primarily they want to know that the return is good, and number two, that the investment is secure, and number three, that it's they all have a different risk tolerance or appetite for risk based on the type of returns that they're looking for, that they're seeking out. So our robo advisor, what it's able to do is it basically crunches all this information. You just put in certain parameters, like how much you want to invest, the amount of time you're going to hold it for, the returns that you're looking for, and then it's able to process your risk or analyze what is your risk profile and your risk tolerance, and then presents a basket of investment opportunities that are available on the application that are in line with your risk profile as an investor or potential investor. And it can either be a basket or it can be a single product, depending on the amount of capital that you're looking to put in, and your goals also as an investor. So it basically becomes as a form of robo advisor on the application for people who don't have that much investment literacy or understanding of the capital markets products, but they want to make a return and they have some capital to put in. It makes this process very convenient. We call it convenience investing. Number three is the diversity of investment options that you can actually access on Sortika. That's, I think, one of our strongest points currently when it comes to investing, because yes, every other company does have an application for its own investment product, but we as Sortika are strictly platform as a service. We are basically just the tech providers and the platform providers. We don't intend to basically get into trading of money for the clients, and that allows us to what it allows us to do is basically list a very diverse pool of investment options that the client can actually choose from, or they can use the robo advisor to allow the robo advisor to select for them, or endorse certain investment opportunities to them based on their profile as an investor. So with Sortika, you come on board looking to invest, you'll find quite a diversity of investment options, asset classes. They range from offshore products to high yield products to cryptocurrency products to NSE, Nairobi Stock Exchange, equity products or futures products. We have companies like Standard Investment Bank doing their 24% with Mansa X. We have Britam money market funds. We have relationships with what's this called? Yeah, there's quite a list of diversity when it comes to investment options, and I think that's something that would be useful to any smart investor, because again, we mentioned about being able to diversify your risk on investments and not putting all your eggs in one basket. Number four uh, is the passive earnings that you get on goals that you create, savings goals. Now, this is something that we're very excited about. We are in the process of launching this because we have partnered with an asset manager, a large asset manager in the country, so that we're compliant to the CMA, and all our funds, or all the funds that are on Sortika, are being managed by an asset manager that's licensed by the CMA. And that also allows us to join the regulatory sandbox, which is in essence a testing ground for new innovations in the Kenyan market when it comes to capital markets products. So because of our partnership with the asset manager, you as a client, when you come and create a savings goal on Sortika, your money is going to sit there for a while until you get to that savings goal, right? But because of the relationship with the asset manager, that money will actually be earning above market return passively without you putting it into any investment product or anything. Your savings goals, we have this goal that's pre-created for all the application users. It's called the emergency fund, and the emergency fund is basically money that's put aside, that you put aside for a rainy day. For example, an emergency happens, you need money that you can quickly call on for that particular emergency. So we create an emergency fund goal, and you can imagine now, once this engagement is actually off the ground, and we're looking at within the process of this month on launching that publicly with the CMA and our asset manager, is that you'll be earning possibly upwards, definitely better than the money we'll be earning in a bank account, with the 6% that they usually give. You'll be earning about maybe 9, 10, and possibly even 11%. These are the discussions we're currently having. So this is passive earnings that you'll be earning on money that you have in savings goals. That's money that you have just sitting on the Sortika app. It's going to be adding value to that, and that's I think something that would be very exciting for really for anyone who's trying to save money on Sortika, or just anyone trying to save money generally. Number 5 is that on Sortika, through some of one of the very innovative services that we built on the platform, which is called peer-to-peer lending. So peer-to-peer lending, just to quickly brief on that, is that it's a secure form of facilitating people to lend and receive money and take loans from each other. So and also within that mechanism, agree on what kind of interest rates that they're trying to pay. So for example, we know how many relationships have been destroyed through friends coming to borrow money, let's say come and borrow money from you, and then they proceed not to pay it, and they default on the payment, and that ends up shattering the relationship, not just friends, even family. So we built a model on Sortika where people can actually be able to loan money to each other, decide whether they want to charge each other interest at all, or whether they want to do 0% interest, like would be the case between friends or family, or whether they want to do 5% interest. This is a process that you can actually in real time negotiate with the lender, who is another user on Sortika, and then you determine. And once you get to an agreement point, you as the lender, you're sure, or you're secure that you're going to have your money paid back, because there's this thing called the loan plus interest cover, and what that translates to is, what is their investment and saving trend on the application? Do they have savings? Do they have investments going on? And based on that, what amount of your loan can they guarantee they're going to pay back? So that once they default, okay, not once they default, but if they default on paying back that loan, they will find that the savings and investment amounts that they have are being slowly, reallocated to the person whose loan that they took up and defaulted on. So this is interesting because when you invest through Sortika, or when you put your money into an investment product on Sortika, you can actually borrow from another user or another group, because we also have groups that come together and loan money out in the form of SACCOs, e-chamas. So you have groups that can loan money to you, or individuals that can loan money to you, thousands of users. And through that, you're able to borrow against your investment. So that means you don't have to liquidate your investment to actually raise a bit of capital that you might need for one or the other purposes. Because when you liquidate your investments, you put your money in an investment product and you take it out before the maturity time, you find that you've lost out on the returns. You've lost out on a significant portion of the returns. So we are helping people understand that it is possible to borrow against your investment goals through Sortika and through the peer-to-peer lending innovation. Then number 6 is the access, convenience, and the lowered barriers of entry to the various investment products. So as I mentioned before, a lot of these like asset management companies and even products that you can purchase on the NSE have minimum investment amounts that you have to put in for you to actually activate that investment product. So with the best performing product currently is the Mansa X product, 24% per annum. That is what they returned to the investors last year. With them, they'll call you. I mean, they'll tell you to put 250,000 shillings up front to be able to activate an investment with them as an individual or as an institution. So on Sortika, one, we're able to scout and curate these investment opportunities and list them. Number 2, they're very convenient to take part in through things like the passive saving and through our application. And number 3, we lower the barriers of entry. So whereas you would have gone to the company and be expected to remove 250,000, you can actually come on Sortika and put in about, let's say, 20,000. Maybe we might even bring it lower to 10,000, so that people can actually begin earning on that 24% with a lower amount, because we know that the retail market would be able to invest in smaller bits, but the volume of the retail market is what we leverage on. So it's able to allow for you as an investor to invest in these products, access them, find more research on them, get trained on how to actually, take part in these opportunities, investment opportunities better, and we lower the barrier or the cost of entry for you as an investor. Then number 7, or the final one, is that, as I mentioned on the previous point, is that we invest highly in enhancing financial and investment literacy and skills when it comes to trading or investing or taking part in capital markets. That's one major thing one major challenge we saw across the retail market is, number 1, is that financial literacy is quite low. People tend not to understand things to do with finance so much. They want to leave it out in the hands of the experts. But we're really getting into an age where, or a time where it's very important for people to be making deliberate decisions when it comes to their finances, more better guided decisions, understand what financial literacy is, and understand what the financial markets can do for them and how to take part in them. And so how we're able to do this is that we've partnered with the NSE to be able to provide courses, digital virtual academy actually, that basically has about 8 courses that touch on things to do with financial literacy, things to do with investing in bonds, in the bonds market, what are derivatives, how to invest in the derivatives market, fundamentals of investing. You even have things about automated trading systems and all this very practical knowledge, of which you actually get a certificate for it. These are virtual courses, number 1, and physical trainings that we have. Of course, now with all the COVID restrictions, we're doing less of the physical and more of the Zooms trainings. So we, through this, we're able to enhance people's financial literacy, and we're hoping maybe some of our course offerings may be of interest to some of the JIJALI, participants. And in essence, this is information that we found to be very fundamental to the whole goal of financial independence. There's no financial independence without financial literacy. So we've seen financial literacy as very important, and we've invested highly in it. And we see a lot of synergies also in regards to enhancing people's entrepreneurship and technical skills. We are allowing our users on SORTIKA, upon the setting up of a business savings goal, to be able to participate in JIJALI programs for entrepreneurship and technical skills. We've just begun the process of now, converting people and being able to hand them over to JIJALI, because we believe these areas when it comes to entrepreneurship, skill development, technical skills development in employment, financial literacy and investment literacy, which is to do with capital markets and investing. These are four main pillars that will be very crucial going forward in our society to really enhance, especially the youth's understanding of finance, and the youth's participation in the economic agenda of the country. So these are some of the ways that SORTIKA can be of massive use to anyone looking to invest or to basically manage their finances in a more efficient and intelligent manner. So, okay, I'll touch on this again, but what is SORTIKA? So SORTIKA is it's a mobile-based wealth management solution that allows customers to create and meet their life goals by utilizing sustainable financial planning and investment techniques. So, as I mentioned, there are certain innovations that we have behind the application that make it very easy for people to take part in this. One of the leading ones being the passive saving function. That, in essence, whenever you're spending, every time you're spending in real time, you're asked whether you want to put a portion of that transaction away to a savings goal or an investment goal. And so, this fundamental service is able to now build onto other added value services that touches the whole spectrum of wealth management. So from saving, investing, being able to acquire loans or debt. And number 4 is being able to plan and manage and budget. Yeah, because we have, our AI system is very, very good. It's able to pick up on transaction data and then categorizes it for you so that out of X amount that I spent this much on healthcare, I spent this much on entertainment, I spent this much on, whatever, clothes. So it's able to do this for you in real time and even give you recommendations. Let me go into the features of the application so we can go, can see this better. But in essence, this is how the landing page looks. I think everyone can see it on the screen. On the left, we have the main landing page, shows you your daily savings, your daily savings targets, weekly savings targets, monthly savings targets based on the goals that you create. And one of the goals that's pre-created for you is the emergency fund. So that's already there. Then after that, you can decide, I want to create something for my upcoming birthday, or I want to do a fundraising for some reason or another. So you create a savings goal for that, and that will be reflected in the daily amount, weekly and monthly amount that you have to save. And this up here shows the savings and investment rate as a percentage on the application. So let's carry on. So yes, as I mentioned earlier, is the passive savings function. I had spoken in depth about it, but I'll quickly mention again, is that it prompts you to put a portion aside every time you're spending or receiving money digitally. It prompts you to put a portion of that aside towards your savings goals. Now, if you look here on the left, it actually shows the threshold amount, the amounts, basically the range rather. So it's a range of between 1 to 10%, and you as the client are the one who sets that percentage up. as to in regards to how much of the value of your transactions is going to be put aside. So as you can see here, it's preset at fee 5%. And then you can also choose your preferred payout method, payment method, and your preferred withdrawal methods here. And as you can see, the notifications that you get, the app is able to log most of your transactional data and be able to prompt you now to save passively through that. You get an SDK push, which is an M-Pesa. It's an M-Pesa integration. It's a Safaricom integration that basically prompts you to put aside money to your savings or investment goals. So number 2 is the savings goals. So I'll briefly talk about this. On SORTIKA, you're able to create 3 kinds of savings goals on the application. So one of the first one is the custom savings goal. So the custom savings goal is in essence something that is personal to you. It can be something like, I have a birthday in 2 months, or I want to buy, maybe a pair of shoes, or I want to, take someone on a date, something of the sort, something personal to you. It can be anything. And once you set that up, you determine what the name of that goal is. So you put in the name of the goal, and then you put in the amount that you're trying to save towards. You put in the date or the maturity date that you're looking to have saved that amount by then. And then the goal is now, now you go ahead to set the goal or to create the goal. Then you find that it has been added onto your list of goals on the dashboard at the landing page. So, in essence, every time you do the passive savings, or if you decide to actively go and deposit, this goal will be receiving money, an allocation of the amount that you've saved passively for that day based on your transactions. So you have the custom savings goals is one of them. Number 2, which we found is something that is going to be really interesting going forward, is the premium goals. Now, the premium goals is what is in essence, it allows you to save towards premium products or premium goods that you might want. Your favorite home appliances, furniture. We're talking about houses. You can save towards cars. You can save towards insurance policies. Even you can save towards holiday packages.
He has informed me that despite his best efforts,
Yes, so you can save towards items, premium items, through the SORTIKA application, and this is facilitated through our relationships with these distributors of these items. So the idea is that you through saving onto this premium item with SORTIKA, you get a discounted rate for that item. And then we're also in the process of rolling out a very interesting cashback or royalties program. So in essence, when you save towards this premium item and you get the discounted price, the difference between the actual price and the discounted price will actually be put aside into your savings goals or your investment goals on SORTIKA. And we feel that to be something that can be very lucrative to people. So anytime, let's say we are planning something with Diageo, for example. So Diageo, they supply all these high-end liquor bottles. So you can go and buy this bottle, scan a QR code, you'll pay the discount, you'll pay the full price, but you've actually paid a discount. And then the balance of what you've paid is now taken out and put into your savings or investment goals, which we find is very useful because, when you go to a shop and let's say you get a discounted price on an item, yes, you'd get a discount on the item. The money still remains in your M-Pesa or in your account, and it ends up getting saved and it ends up getting used. So it doesn't really translate to a saving as much as it should. And so this is one of the things we're looking to do with the premium saving goal. And then the third saving goal that you can create is the utility savings goal. So utility savings, we have things like rent payments. We have utility payments for water, KPLC, all these things you can save towards them. We have retirement benefit plans. Very interesting new development, which I'm sure a lot of us are not really thinking about yet, because we've just gotten into the working, into the employment market or to entrepreneurship. So we've seen it as something that we can begin sensitizing and making awareness to people on the importance of building towards your retirement plan, even as early as now. So we list it here as a utility goal. And another utility goal we have there is the business savings utility goal. So this is money that you put aside that's passively being saved, or you can actively deposit to, and that specifically goes to your your business needs, or towards your business needs as working capital. And it's part of our mechanism or value proposition to our clients who also want to join the you-JIJALI entrepreneurship program. They also have to have business savings going on as well. So that's on the savings goals. Then another interesting service on the SORTIKA application is the group savings function. So on SORTIKA, you can come together as a group. We're actually calling it you-JIJALI, and we'll be working on that branding as well. So in essence, as a group, you can come together and decide that you want to save collectively towards something. So the utility we found people making of this group savings is, for example, let's say someone has a medical bill amongst a group of friends. So the friends will come onto the SORTIKA application and they'll create a group in essence. They'll give the group a name, they'll outline the group's objectives, and they will also set the target amount of how much they're looking to get to, and also set how many members they're looking at targeting. Currently, the maximum members you can have is 500. However, we have found people approach us who want to have groups that are unlimited in entry. So we're able to model the group savings element to suit the person's need. And so now the administrator of the group determines, what are the criteria, how much people should put in, they oversee people's activity, if they're doing well or not, allow people entrance and all. They can manage all that decentralized or from wherever they are on their phone. And people in the same breath can also join on that you-JIJALI or that group from anywhere in the country, as long as they have a smartphone and an internet connection and are participating in the group. Then the other modality the other utility that we found groups doing or have made out of the group savings function is that groups are actually coming together so that they can lend people money. So how this works is that X number of people come together who have a bit of capital, they put it into the group, and they keep saving that money, putting it aside into the group. And then now other users on SORTIKA can come in, either join the group or request for a loan from the group, so that they can be able to access affordable debt from the group. So we found some groups are actually making use of this particular functionality for that purpose, to loan money out as a group. Number 3 utility we found that people are making out of this group savings functions is in the space of the NGO world and the international organizations. So these NGOs and these international organizations tend to have budgets that are allocated towards doing community service work in grassroots and taking grassroots projects down into the community, and empowering people in that particular way. However, they found that these tendencies to have a lot of lack of accountability when it comes to the money being distributed down in these grassroots levels. Traceability of the money sometimes becomes a challenge, and just having a transparent mechanism for them to be able to distribute and allocate funds to various grassroots groups in a way that they can track and see the performance of that money and the allocation of that money, where did it go to, and be able to have a more efficient process of doing this. And then finally, groups can also come together as a collective. You can come together as a collective of your friends, maybe your family, your work colleagues, and decide to set up a group that will invest in the investment products that are on Sortika. So what that allows you to do, for example, if you came together as 10 people, we're each putting in 50,000 into the Mansa X investment product, the one I told you that gives 24%, you obviously will enjoy added returns through the volume that you guys are collectively coming together with, as opposed to if I individually just came with 50,000 and put it in the investment product Mansa X. I'll still be exposed to those returns that they're getting, but they will be limited to the volume of the account. You see, the bigger the volume on the account or the fund that you're working with, the higher the return that everyone is going to get. So in essence, this is one of the utilities we found people are using the group savings function for. Okay, so on the investment side, I briefly mentioned it earlier, but I'll touch on it again. We list investment asset classes, or investment products rather, by companies locally and some offshore companies, so that we allow people to begin on their wealth building journey as soon as yesterday, because we think that as an option of financial management, believe that investment is more appealing, although that may not be the case across the board. But when you understand more about the investment process as compared to the saving process, all of which they're all fundamental parts of the spectrum of financial management. I mean, you have to have capital that you have aside to be able to invest. So saving is part of that journey. It's a step towards that journey. And then investing is where now your money is able to work for you. And so that's what we allow people to do by curating, scouting the best investment products that are licensed by the Capital Markets Authority, and listing them on the application for people to be able to take part in, through the application easily from wherever they are. So we have relationships with the Nairobi Stock Exchange. We have their products listed on the application for investment. We have relationships with ABSA. We have relationships with Britam. We have relationships with Standard Investment Bank and a few other asset managers in the country, as well as offshore brokerage companies and fund management companies, one from the States, one from the UK, that we are in the process of licensing to get their products listed on the application. So the other thing I wanted to mention is that we have this thing we have this mode of investing called convenience investing, and how that is facilitated is through our robo advisor. I don't know if you're able to see the visual over there, but yes, on one front, you can decide to go at it yourself and do a bit of research into the investment asset class, and determine from that point, after doing some thorough research, what you want to invest in and why you want to invest in it. The other option is to allocate your money to a financial advisor. So this would be, for example, an asset manager, or a company that will either advise you on where to put your money. They'll do the analysis and research for you, and then tell you, okay, go and buy this amount of stock, or go and buy this stock right now. It's doing very well. And then the fusion of that is what we've built onto the Sortika application, which is the robo advisor. So it's able to sort of give you consultation in real time on what investment product would be the best for you based on your risk profile as an investor. As I showed earlier, as I demonstrated earlier, you put in these criteria, such as the amount that you're looking to invest, the appetite for risk that you will have, or rather the return that you're looking for, and the amount of time that you're looking at. And this robo advisor, being as intelligent as it is able to come up with a basket of options for you to conveniently invest in, without you necessarily having to be a financial analyst or a trader to go into all the technical analysis of these things. So this is the investment the investment innovations or the innovations around investment on Sortika. So 5, we have some fun things that we do on Sortika as well. Apart from all the finance related things, we have some gamification aspects that we have been running on the application. So for example, there's this savings lottery. So the savings lottery can work in 2 ways. One, it can be a public one, which is open to all the people potentially who are on the Sortika application, and basically what it's able to do is that our algorithm, we basically developed some computational models that are able to determine who that are able to land on a specific a participant out of the collective of participants at random. So it's a mathematically calculated thing that determines randomly who the winner of this lottery will be. So how it works is that let's say it's a private lottery, just to make it simpler. Me and 4 other people, we come onto the application, we create our private lottery. Each of us puts 100, 100, 100, 100 on the application. Then the computational model or the AI system is able to now circulate and do a rotation on all the participants and land on the person that's mathematically random. And that person ends up collecting the whole pot, whole cash prize, and they proceed to enjoy their winnings. And the same can now continue now again, where we do, it's basically it was based originally on the concept of table banking, how the chamas usually come together, and then all of them will put money up, so that one person that week will go with the money for that chama. Then the next week another person will go with the money for that chama, usually in an organized fashion. So you can imagine now doing this with thousands of other people, and people are maybe putting in 100, 100, 100, 100, 100, 100, 100, or whatever amount that is determined, and you happen to be the lucky winner. So you see, you end up going home with the pot, and it's something. It's part of our gamification aspects. However, we are only currently allowing people to do their private lottery because to do it publicly, it means that we'll have to get the licensing requirements, of which we're working on. So we'll proceed. Peer-to-peer lending. This is another added feature on the Sortika application. Very, very interesting feature. It allows for people to securely lend and borrow from each other on the application, and you as the lender are sure that that your money is going to be secure based on the person who's requesting, based on their saving or investment rate on the application. And that way you're able to be sure that once you give them a loan, you'll be able to settle that back without having to make any phone calls or start trying to follow them up, because their investments and savings will basically just be deducted and allocated to you if they default after a certain amount of time. So this peer-to-peer lending is also the one that allows you to borrow against your investment goals or investments. When you set up an investment, it's running, you don't want to liquidate it, but you want to get some capital to use for other reasons. You can borrow based on your based on the investment goals that you have as well. So this is an innovative new model. We as an application do not loan money out, but we do, however, facilitate for people to loan money to each other securely. Okay, so in terms of additional features, I'll run through these ones quickly because we're also running out of time. Individual loan pricing. We also have the group borrowing function where you can borrow from a group on Sortika. We have the savings borrowings. So in essence, when you have your savings going on the application and you need some capital, you can borrow against those savings or those investments that you have. We also have a very robust planner, personal planner, which comes in with a budget calculator with recommendations on debt that you can take, recommendations on your budget, recommendations also in regards to just how to plan your financial process better. We also have a net worth calculator on the application. We have the mobile wallet, which is the where the money sits before you're able to settle it back to your M-Pesa. And you have the savings points, which you get savings points for every all the saving and investment that you do on the application. So so this is some of the added features on the application. Okay. So the problems that we identified on Sortika, which were actually these are the core problems that we look to solve through the innovations on the app, is the low gross national savings. As I mentioned earlier, our target for the country, according to Kenya Vision 2030, is 25% gross national savings. But in 2021 we're at 4%. So you can see, this is something we really need to pay more attention to. We need to get the youth and as many people involved in taking part into savings, and through Sortika, we make it easy through the passive savings and through the fact that it's an application, and through just the added value that the application brings to be able to help people improve, or at least we see platforms such as Sortika being very important in the next decade going forward. Then low household incomes. This is one of the major challenges we're looking at. So we want to be able to provide people means for them to enhance their income levels, whether it's through investing or whether it's through enhancement of their technical skills, so that they can, get more value for their work, and a bunch of other added features, but primarily helping them earn better, right? Subdued earning power. This touches again on the previous point. Is that we are primarily we want to help people build their wealth and show them that it's very possible for them to build their wealth, even if they're not necessarily have like all the 20 million shillings to invest. You don't really need to have all that, but you can start from somewhere and start building over time. You get into a more sustainable financial position. Poor financial planning. Poor financial planning is a major thing. I mean, for example, people tend to live beyond their means, as a lot of our research has shown, is that people tend to be able to, they're literally spending more than they're able to bring in terms of income. So we want to help people be able to plan their money much better. We want to help people be able to, stop allocating their money into sort of fruitless endeavors, like, betting and all these things that we like to take part in, because they give us the opportunity to generate an income, but they also tend to be very damaging to our financial position, especially the bulk of us. So in addition, we also, we want to build a counter access to people spending as much, acquiring immense levels of debt and piling it on to themselves, just acquiring more and more debt that they cannot sustain, especially with now all these loan applications. Loan applications that give you high interest rates. Then, you default on that interest rate, you go to the next loan app, take a loan, default on that, end up on CRB. It's damaging to your financial position going forward. When you really require it the most later, it'll be a challenge. So we building mechanisms that allow people to help to plan their finances better. And then number 5 is the literacy levels in financial literacy and investment literacy. We found to be very low, and we are investing heavily into being able to enhance our clients' knowledge in this space, and through partnerships with people, with organizations like you-JIJALI, and with the organizations like you-JIJALI, we want to enhance people's entrepreneurship skill and what they're doing with their business, and also enhance their skills in the employment environment with more technical skills. So our solutions: number one, I'll go through this quick: passive savings. Number two, investment opportunities that we're able to scout and list. Number three, we have practical financial planning tools, and they're very dynamic. So, dynamic, by dynamic, I mean it's a more vibrant presentation on financial planning. Because, for example, the static method would be, let's say, going and setting up an Excel chart and putting in, or I have a budget, this is my amount, the total amount I'm going to put aside, this for food, I'm going to put aside this for food, this for food. And with our platform, it basically does that for you in a very automated and vibrant way, so that it makes it very easy to take part in financial planning. We also have the group savings, as I mentioned earlier. We have the peer-to-peer lending, as I mentioned earlier. That's a passive income generator for people on the application. So it definitely contributes to subdued earning power for people. They can begin earning passively through this, and also through investment opportunities. And then finally, we as I mentioned, have invested heavily in financial literacy education. So we are partnered with the NSE currently to provide our virtual academy that covers content in the space of financial literacy, capital markets, how to trade them, capital market products, and these are licensed courses. And in addition, we also have a very broad calendar of physical trainings that we do now in partnership with the NSE to enhance people's financial and investment literacy. Okay, so just to briefly touch on the benefits of using Sortika, we have the practical financial management tools. There's actually no cost of depositing funds on the application. So whenever you're doing your passive savings, don't feel like you're being pinched on any cost. There's no cost to doing that passive saving and depositing money on the application. Then there's also the access to passive income opportunities through peer-to-peer lending and through the investment options. We also have access to multiple investment opportunities with lowered barriers of entry on the application. And then also we enhance people's financial literacy significantly when they take our courses, or when they join our virtual academy, or when they join entrepreneurship programs by you-JIJALI through us. And then we also have very innovative solutions that ultimately lead into a world of convenience when it comes to your personal wealth management. Final added values that we have on the application is Sortika's virtual academy and trainings with NSE. I touched on this briefly. It's a very interesting program. Courses range in price maybe from about 4,000. They're just about 4,000, and you can do them at your own convenience from wherever you are. They're examinable, and you get a certificate showing your competency in that particular field. So we have courses such as the financial literacy program, introduction to enterprise risk management, introduction to derivatives, fundamentals of investing, real estate investment trusts, introduction and principles of good governance, introduction to the bonds market, portfolio management, portfolio being your investment basket, how many things you're investing in is your portfolio, and how to manage that is very important for any investor. So some of the things that we're able to train you on. Then we also have promotional challenges that we're doing, such as the Sortika Super Saver. When you're able to, you have the Sortika Super Saver, and we also have Sortika Trivia. So based on how well you understand the investing and financial literacy, you can win a cash prize on Sortika, or based on your savings rates on the application. Every week we actually select the top saver for that week, and we're able to allocate a cash incentive to them to continue saving better and better on the application. And then one interesting thing that we'll be adding onto the application ideally within this month is the Sortika Super Leagues. So on the Sortika Super Leagues is in essence a framework of leagues that people on the Sortika application will basically be ranked on. And based on their activity on the application, whether they're saving, they're investing, they're creating groups for investing, or they're joining groups, or there are various threshold criteria that we have. But based on these parameters, they can either climb or go down on the leagues. And as they climb, they stand chances of winning, better and better prizes. So, like for example, the top league or the Premier League or whatever, winners on that will be ideally people who have very impressive investment and savings rates. And so these guys, stand chances of winning, like cars, for example, and high-end vehicles, and very many other boost, like rewards to them having better investment and saving activity and activity generally on the application. So these are some of the added values that we have on the application. If you want to connect with us, you can find us on Facebook, Sortika app at Facebook, Sortika app on YouTube. We have enough content there. Go check it out. Sortika A on Twitter at Sortika A. And additionally, you can also get in touch with our customer care people through the application or on WhatsApp, where we have a group as well, where we're able to educate people and give them regular content and insights and information that is very useful to them. So yes, you can easily interact with us on these platforms. And for those of you who may be interested in downloading the app, which I think it's something that should be of interest to you, especially anyone looking to get into entrepreneurship, it's very important to have good wealth management practices. Go and look for it on the app on the Play Store as Sortika. It's available there on the application store. So, and soon to be on the Play Store. It's available on the Play Store and soon to be available on the App Store, most likely within a month's time. So, and with that, I want to thank you all for attending and giving me, your audience and your attention. It's been good talking to you, and I hope this has been an insightful presentation to you all. If you guys have any questions at all, you can proceed to field them through either now. I don't know how much. Yeah, we can definitely get back to you at a later point. But we can briefly answer a few questions, maybe 3 questions currently. But thank you. And again, as I mentioned, Sortika, our motto is Nikispend na save. I hope this picture relays this well enough. And if not, here's our logo. So thank you. Thank you all. I hope you guys are all still there.
Thank you, Ian, for the presentation. I think the last 3 questions we had, you have responded to them as you actually continued with the presentation, because it
Great.
was about whether Sortika is on the App Store or on the App Store, and you have said it's not, but it will be there soon.
It will be there within a month.
The app is free.
The application is free.
Yeah, and regarding how much you charge for your services.
Yeah, in essence, our charges are pretty standard. They're very closely connected to the standard because we use a lot of M-Pesa-based transactions. So our charges are not so far from the normal M-Pesa transactions. And that's what actually makes it very attractive for people to use the application, is that they don't really feel the pinch of the cost of it to them. So, for example, depositing money on Sortika, you're not going to be charged. But withdrawing money on Sortika, you'll be charged to 59 shillings. But that goes across all amounts. So, it's better to be in a position where you're withdrawing a larger amount, because you'll be paying 59 shillings still. But as opposed to if you're withdrawing a smaller amount, you'll still pay 59 shillings. We charge very minimal rates when it comes to the investing. I think it's about 1% or something around of the amount that you're going to invest. So basically, we will just charge a bit like our 1% on that, and then forward it over to the
All
asset
right.
manager.
I believe that anybody who wants to know more, you can
Yes.
follow Sortika on Facebook.
Yes. You can definitely follow us on Facebook. Check out our website. That's sortika.com. Interact with us on WhatsApp or wherever. Download the application. Check it out. See how it feels. Give us some reviews. Give us your comments, your feedback. We look forward to engaging with you all.
Thank you. So you can follow them on Facebook or Twitter and the other social media platforms to know more about them. About you-JIJALI, you can call us on 0781 591 942 for any more information you may want. The recording will be sent to the email that you used to log on to, so you can follow it up, and any more information you require about investment, you can always reach out to Sortika, or you can always reach out to you-JIJALI and we will be able to connect you back to Sortika. With that, I want to say a big thank you to each one of us who was able to log on and to follow the proceedings and to be patient to hear the presentation about how your money can work for you. It is our hope that the presentation will be able to make your money actually work for you, and you can identify the different investment opportunities that are out there that you can use. There is one participant, Charles, that had asked about how you can help somebody get back on track after if they had done an investment and lost the investment that they had made. So I would request Ian to give your number, and this participant can be able to call you and you can be able to advise them on the best way to pursue. I've also seen somebody else has asked the same question. So Ian, quickly, if you can just post, say your number, and Grace can type it for those for others to see. The
Yes.
number, Ian?
Yeah, sure. So the number is 0798 087 598. Did everyone get that? Or did you get that, Grace?
Yes.
Awesome.
All right. So you can reach out to Ian with 0798 087 598, and he will be able to advise you more and also help you on board onto Sortika. And you can reach you-JIJALI on 0781 591 942, and we will also be able to tell you more about what you-JIJALI does and the different learning opportunities that are currently there. With that, thank you so much for logging in. Thank you for taking the journey with us. Thank you, Muhammad, for loving the webinar. We have also enjoyed having you on board. With that, it was a pleasure to meet every person on the webinar. Have a good weekend and enjoy your Friday tomorrow. Goodbye.
Right.